Hey, what's up, YouTube? How you doing, guys? Are you guys ready for today? We got some numbers coming in, guys, today. I mean, they were just released at 8:30. We're gonna take a look at the stock market, but if you guys know, the PCE reports are already out. Uh, Price, earnings, inflation data, expenditure is out, guys. Or personal consumption expenditure price index. We're gonna take a look at the numbers. We're also gonna take a look at what's going on with Twitter, and we're gonna do some stocks. We're gonna look some stocks right now, guys. But first things first, if you guys wanna know, the U.S. Core PCE price index that were released today. They are released every month. They are a monthly thing, just like the CPI report. For what I've been reading, the PCE is the one that the Fed takes the most into consideration. But the numbers for September were at 4.7. And this month they are at 4.9%. So it's a little bit better, a little increase, guys, a little more better, guys. Well, this is not it, but yeah, the numbers are coming out pretty good, guys. They came out really good. We're gonna look at the dogs, the big stocks right now. Let's see, because we have some earnings today. So the PCE numbers coming positive means that we might be able to see a little bit of green. So we're hoping for that, guys. We're hoping for a little bit of green on the stock market. Bleeding. The Fed favor inflation metric tricked higher again, guys. So the core personal consumption expenditure index seasonally adjusted, but the core is saying that it increased by 5.1% year over year in September. And you guys saw we have big earnings this week. We still have some earnings going on this today, but the biggest earnings, were of course Meta, Amazon, Apple, Alphabet. And some of them did okay, some of them did a little bit terrible. And for what it's looking like, the market is a little bit flat, a little bit red, if anything, barely red. And yes, I was reading this article saying that everybody's rushing to buy bonds, because I think yesterday or today was the last day of buying bonds at a 9.62 yield. 9.62% yield. Oh, and they say that when the CPI numbers come out, it might go down, or the yield on the bonds might go up to from 5 to 6% or something like that. That's what they pay now. Let's see. It is hard to imagine that there could be a better deal for parking up 10,000 in savings than Series I bonds. At this very moment, the 9.62 yield is the top notch, and you can count the hours before it goes away. Wow, they're paying amazing 9.62 yields. That's why there are a mad rush crash in the treasurydirect.gov website, the only venue for buying the government issued saving bonds. So I guess the website got it crashed a little bit because there were too many people trying to buy bonds at the same time. The most important, it might take patience. The Treasury Direct website says we are currently experiencing an unprecedented request for new accounts and purchases of buy bonds. Due to these volumes, we cannot guarantee customers that will be available to complete purchase by October 28 deadline for the current rate. So the Treasury Department, one, it might not even be able to proceed the flow of orders is receiving by the deadline, as reported by the Wall Street Journal. The data page from the Treasury has been noting a drop of in sales for October up to this point, with only 703 million compared with the previous 6 months. The peak was in May with a record of nearly $5 billion in sales. So the Treasury bonds are on sale, guys. And you want to make sure you get your Treasury bonds today. This is not financial advice. If I could, I would buy some. But let's see. You are locked in for at least a year, and your combined rate of the previous will be like around 8, considering that the rate available on November 1st will likely be 6.48% based on analysis of inflation data. So meaning that the yield that they're paying, it's going to go down. You know, you're going to get less yield money for your treasury bonds than if you buy before today, I'm assuming. Consumer spending climbs again even after adjusting for inflation. We're looking at ExxonMobil over here. I do have the stock. Let's see some of the stocks that have earnings today. We're gonna check a couple of them, and then we're gonna talk about Twitter, guys. But let's check first their quarter earnings. Let me see. Estimating actually per share. Oh wow. So ExxonMobil, we all know ExxonMobil as a crude oil company, and they just reported on their earnings, and they estimated that they were gonna make $3.65 per share, but it actually came in at $4.45, so that was a beat. We will expect that because the oil companies have been doing really good previously. We're gonna check the market cap of ExxonMobil is $449 billion. 52-week highs, $110. 52-week lows, $57, guys. So it's on the 52-week highs. It's a little bit expensive, a little pricey right now. Me as an investor, I will wait. This is not financial advice. you could do as you like. Me, I would wait because the stock is a little bit overpriced right now, but that is up to you. Let's see what else we have. We have Chevron too. Let's see Chevron. Chevron corporate engages in the provision of administrative, finance, management, technology support for energy, chemical operation operates to upstream and downstream segments. Let's look at Chevron's earnings, and for Chevron, it was a beat estimated $4.91 per share, and they actually had a $5.56 per share. So that was actually pretty good beat for them. Over 40 cents, 40 cents. The market cap is $348 billion. That's a solid company. They pay dividend. 52-week high is $182, and 52-week low is $110. So we're gonna look at it. Right now it is 52-week highs, guys. Basically, so I will wait a little bit to purchase any of this. They have good dividend yield. Can we look at their cash? Let's look at the cash. How much they made in cash? Chevron. Let's look at it right here on Google. It's a little bit more detail. And as we said before, they expected $4.92 and reported $5.56 on revenue. They expected $61 billion and 4,400 millions and reported 66 billions. So a beat by 8%, guys. Chevron is a pretty solid company right now. And what did we say? Let's check Exxon. How much money did Exxon bring? Exxon earnings release data. It was also a beat. The expectations for ExxonMobil Corporation, it was 3.80 cents and reported 4.45. So that's over 50 cents. That's pretty good. A 17% increase, and expected revenues of 102 billion and brought 112 billion dollars. ExxonMobil, this company's generated a lot of cash, guys. If I look a little bit like this, guys, it's because I'm under the weather. But yeah, let's see other earnings, other companies. AbbVie is a biopharmaceutical company which engages in the development and sales of pharmaceutical products. It focuses on treating conditions such as chronic autoimmune disease and rheumatology, gastrology, and dermatology oncology. So it's a very, very important company, guys, and it also creates pharmaceutical products for your health. Very serious company. The market cap is let's look at the earnings first. I guess they didn't do as good on their earnings. Let's look at it, Abby, because they did it beat expectations. I guess not on both. Let's see, Abby. So they expected to make $3.56 per share and reported $3.66. They expected $3.56, but they reported $3.66. So that was a beat of 2%, 2.68%. But in the revenue, that's when they missed by a little bit. The expectations for the revenues were 14 billion point 900 billion, 19.94 billion. This is just say it like that, guys. And it was reported that they only brought in an amount of 14.81 billion. So they missed not even by 1%, guys. And they have missing for a while their revenue. So you should look into this company and do your diligence if you want to really invest in this company, you know. That's what I will say. And we got Colgate. Colgate is not such a crazy company, but it's been out here. Let's see. Colgate was founded in what? 1806. Oh my God. Oh, and Colgate, estimated amount of dollars per share was 0.74 cents, and actually it was 0.74%. So it was basically flat. It barely made it. It did it. You know, like when you say somebody won, but they barely won. So they missed something, I'm assuming. Yeah, they missing revenue. Expenses per share, they beat. Revenue, they missed by just a little bit. Let's see. Expected, like I said, was expected per share was 73 cents, and they reported 74 cents. Expected revenue, it was 4.47 billion. They reported 4.6 billion. So they missed by like $100 million. That's not really bad, guys. Let's look at the dividend. Do they have dividend? Colgate? I don't know. Yes, they do. They have a dividend. Price earning ratio. It's not looking bad. $61 billion market cap. The 52-week high was 85 cents. 52-week low 67, and we are right now 71. It's around the 52-week low. Let's look at it today. Today is a little red. ExxonMobil is up by 1%, 1.5% today, because they beat expectations. Chevron beat expectations, so they up by 1.6%. Avi, let's see, Avi beat expectations on earnings per share, but missed on the revenue, so they're a little bit red. Same goes for Colgate. No, and for a dividend stock, let's look at it. Let's look at the 3 months. Let's look at the year. Let's look at the 5 years. We're a little bit red. It was doing alright before all the economic collapse and the war. I'm not being extra. I'm not dragging it. But yeah, breaking news, guys. Breaking news. Twitter Twitter has been delisted from all exchanges and is no longer tradable pending a cash merger. Wow. This stock is not supported on Robinhood anymore, guys. Holy guacamole. Elon did it. He did it. Let's look at the BOO. BOO is trying to climb up. We have some decent earnings. There's more companies that are reporting their earnings today, so we're gonna go over some of them later. So, but for right now, we're just gonna look at the main stocks: BOO and BTI. Stocks are slightly down, guys. Slightly down today. Nothing crazy. Yep, we have Colgate. We have a couple of stocks that are coming out with their earnings later. Let's just keep searching for some news, guys. Let's look for some news. Let's see what's going on in the market. Stock slump under the way of renewed yield surges. Yes, we checked that. U.S. future drops as data to keep Fed's aggressive market wraps. Let's see what they're saying because the U.S. Let's read this article from Bloomberg, guys. Let's see what they're saying. U.S. stock futures drop after a fresh batch of data show persistent inflation, paving the path for the Federal Reserve to stay aggressive. Treasury yields rose. The S&P 500 futures fell. Contract on the tech-heavy Nasdaq 100 were down on Amazon.com Inc. plunges at its sales forecast as trail estimates. Benchmark 10-year Treasury rose to around 4.04% as hope of the Fed pivot fizzled. Data on Friday showed that a core gauge of U.S. inflation accelerates in September while consumer spending stayed resilient, bolstering the Fed the case for another June rate hike next week. U.S. employment cost also rose, another data point that will keep the central bank firmly on its path. So these numbers, basically what they're saying is that the Fed is going to keep doing their job, and they're definitely going to keep raising rates at an alarming pace, guys. So prepare for the CPI numbers. I think next week and also the week after we'll have the Fed talking. Correct me if I'm wrong. Like and subscribe, guys. Like and subscribe so we can bring this together. We can share news, and you can ask me anything that you want. Anything that you want me to if you need me to look up anything or watch anything or check any stock, we can do it together, guys. But yeah, Mr. Musk is buying Twitter. We have ExxonMobil stock blowing up 2.3% pre-market after earnings blow past estimated revenue, tops 112 billion. Yeah, that's also what I say right now. I was like, when I see ExxonMobil with this revenue numbers, I'm like, wow, ExxonMobil's solid. They making money like crazy. And remember, let's look at ExxonMobil's market cap. ExxonMobil's market cap is $449 billion, and they bring in $112 billion on revenue. Oh my God. This company is very strong right now, and also, since we are spending all of our strategic oil reserves here in America, we're gonna have to keep buying some more oil, guys. So the oil crisis, which is not really a crisis. It's just, we have oil. They just don't want to dig it out of the ground. Let's check Bloomberg. See what's going on, guys. Well, before that, let's look at the crypto market, guys. Let's take a look at the crypto market. Let's look at Bitcoin. Bitcoin has done well. Bitcoin was doing pretty good a couple of days ago, and now we are hurting a little bit. It fell a little bit from the 2000. A week ago, Bitcoin was like at a solid $19,000, 19,100, 19,200. It finally broke a little bit by going to 19,300, 19,400. I guess the earning calls and the CPI and PP and PCE report and hopefully the government trying to bring some law and regulations, to the cryptocurrency. Definitely help Bitcoin break through $20,000. The high it was at some point, it did broke, I think, 21,000. It was hovering between 20,700 and 20,900. Now we're it's now in the lowest 20,300, which is still not bad, guys. We just want Bitcoin to slowly go up. We don't want Bitcoin to go up to the moon in one day, because it's not going to hold that high. It's not. It's the the higher you go, the harder the fall. Plus, we want people to invest for the long term, so it could keep growing for years and years, 10, 20, 50 years, 100 years. You want your Bitcoin to always keep going up and stuff. You want your investments to grow. You don't want your investments just to take off for one shot. And, it's kind of impossible right now with the market that we're having and stuff. For Bitcoin to go from 20 to, 100K, 20, 200K. It's right now with this market, it definitely could go up. I'm not losing my faith on crypto. Because remember, look at Dogecoin right now. Since, I don't know if you guys know, but since Elon Musk announced that that they confirm 100% that Elon Musk was buying Twitter, Dogecoin is up by like 10-15%. Let's look it up. Just look at Dogecoin. Yeah, for a second I thought I was typing, but I guess I was not. Let's look at Dogecoin. Let's see how Dogecoin is doing today. Today alone it's up 9%. Let's check the week. From $5 and 50. Well, from 5 cents. Let's. Sorry about that. 5 cents. 0.0595 cents is all the way up now to what we have now. 0.0851 cents. Saying that ain't like a week is up almost 45%, more than 45%, which is crazy. For the month, it's up 36% too. For the year, it's down 71%. All time is up 15,000%. So for the day, Dogecoin is taking a little bit of market value from all the other cryptos, because people are getting a little bit of hype and they're buying Dogecoin. They're waiting for Elon to do some Saturday Night Live stuff again, and that's not happening. He has too much on his plate. He's busy right now. Let's look at the big OG Ethereum. Ethereum is rocking, guys. Ethereum 2.0 basically. Assuming there's a lot of whales and big investors buying, that the crypto market is going up so much. We want to see what's going on with the market. Well, the market bell just rang right now, guys. So let's look at the stocks. Let's look at the market. Let's go to Webull. On Webull, you can see everything a little bit more better, guys. Stocks are moving today. Let's look at Google. What's going on with Google, man? Google had such a massive drop, guys. Let's see, in one day. Let's look at Google's eyes. Give me 1 second. Alphabet, guys. Let's look at Alphabet. Let's see what's going on. I just want to see how high it was the other day. Yesterday we had a massive drop after earnings. From $104, we went all the way down to 91 bucks. Alphabet's a solid company, guys. It's not going nowhere. This is the best time to buy Alphabet, guys. Let's see. I was looking to see. Let me check for a call. I'm gonna look up a call for Alphabet. Let's see how they're selling. The trade action up to November 4. The price of the shares $92. Let me see one call for. Pretty good, guys. I was just looking. I checked the call for Alphabet, and it was only like $250 for a $93 call. Maybe later, I'll do a little bit more of investing. But let's look up some. Let's see what's going on over here. I'm trying to see any news that can help us understand why the market is red, or what's going on with the Fed.
Cook's able to navigate this storm more than you see Zuckerberg and others this week.
Hey Dan, good to catch up. Dan Ives. The pain
Thank you.
at the single name level in tech this week has been unreal. Apple may be the relative standout. I've been excited for this interview for a number of weeks now, and I'm pleased to say that Hugh Hendry...
Yeah, Apple is making a really good standout right now, guys.
Look cool enough sitting next to you. I think I'm going to have to lose this tie in a minute. Thanks for coming into New York. I want to start with this. It's a comment I heard on your podcast, The Asset Capitalist, about a month or so ago. And you had an investor on that used a line that I've heard a million times. We've all heard it a million times. I'm long equities because over the 5-year period, usually equities provide me with a positive return. And you questioned that, and I think we all need to question that in this environment. What did you say back?
Well, I mean, it's
The S&P 500 is going up, guys, right now.
we don't want to go against that.
The markets are turning green.
The conceit and the arrogance.
Yeah, the markets are turning green. Dow Jones is up by 327 points. Nasdaq is up by 55 points. The S&P 500 is up by 22 points.
There had never been a period
So,
where nationwide U.S. house prices
yeah, we're
had
definitely
fallen
looking good,
together
guys.
until it happened. And when it happened, it devastated the global financial system. And today, we're still trapped.
Hopefully Amazon recovers a little bit.
So you say a century's worth of market
Let's look
data
at Amazon.
is not long enough. Do you have to take history back a little bit further? Is that how you think about this?
No. I mean, no, this is Asian philosophy.
Google is doing alright. I mean, we're down 8%. Let's see Amazon. How much is Amazon down? Amazon down 11%. Holy guacamole. 17.91% in 1 week. Let's see. We have to look at the earnings report, guys.
Yeah. Do you think the Fed's
They estimated 22 cents per share. They actually beat it by 28 cents. They missed revenues. They missed revenues, I guess. So Amazon's earnings.
Last time we admired a step taken by the Fed that we thought, wow, yeah, that really has helped my life. Why is the default
I guess Amazon missed the earnings. Yeah, they missed on revenues. The main expectations per share. So the share, went up. It's doing good. It's amazing. We're looking at the revenue.
that generated
Expect $127 billion, 0.47, and report $127 billion, 0.01. They missed by like $300 million, $200 million, bro.
an elephant passing through the body of a snake.
The stock makes plenty of money. $127 million. Holy guacamole.
It's gone.
They're killing it.
Looking at Amazon's
Amazon's
100 warehouses.
earnings this year have been
Because
horrible.
estimated. And what's your headline again? We're looking at Amazon's.
It's a good company. It's a great company. But
And we've had two.
they need to come down on those expectations, I guess, guys. That's what it really needs to happen.
The recession is getting bigger and bigger, and that's the fog.
You've picked up
Yep.
on it, the mismatch between demand and capacity, and it was a clear mismatch in 2020, 2021.
Yeah, alright, guys. Let's keep looking and checking out the markets, man. I'm just loving it right now. Let's see the biggest cash producers. Exxon tops tech giants as biggest cash producer in the S&P 500. Holy moly, Exxon. They did make 120, 110, some 112 billion dollars. Which is like 25%, 30% of what the company is worth. They made that in 1 quarter or year over year. Still outrageous amount of money. This is one of the companies you can expect to be a dividend aristocrat, and you also expect for the company to grow. It's one of my favorite companies. So let's add it to the watching list, guys. And I'm not gonna really debate too much with the price, even though let's say the 52-week high is $110 and right now it's $109. They have been beating the quarters, their earnings in almost every quarter, so they're doing pretty good, guys. Let's look at some of my investments. Let's look at what I own. I have Webull. Let's look at my earnings. I saw that Kraft Heinz did a good job the other day on their earnings, so I bought me one share of Kraft Heinz. I know Intel is not doing, and Palantir they're not doing the best they can, but I bought some Intel and I have some Palantir, also some Bank of America. Slowly but surely, guys, you see we growing the account by one share. Even if it takes you to buy one share every time you get paid, or once a month, you know, you can do a little big sum to invest. All that we want is to keep investing. We want to keep growing that account at slow, consistent rate or pace that you can do, you know. I looked the other day at my M1 account. Let's see. Week ago, I only had $79 in my account here, and I added another 20 bucks slowly. The same thing did in Weevil, of course. That's how I was able to buy the share for Kraft Heinz. Purchase a little bit more of everything. I transferred, I think it was 25 bucks to divide it into Apple, Walmart, Nasdaq, and Microsoft on my M1 Finance. I think I did transfer 20 bucks to Gemini. Like I say, slowly and steady we grow our accounts. You can do 10, 20 bucks in every account. 3-4 accounts is 40 bucks. 20 bucks is $80. Remember, this is not money that you're spending, you're wasting. This is money you're saving. One of these accounts can also be an emergency account. If you don't have a savings, not that you don't have a savings account, but that you don't put money on your savings. You only have money in the checking, you pay your bills, put some money on your investments, and then, you know, you take everything else and invest it, which you shouldn't do that. You should always put some money on the side in your bank account. Always have your checking and your savings, and put some money on your savings for, you know, emergencies only, rainy day, something, God forbid, bad happens. And you have right there 3, 4, 5 months worth of rent, and at least a little bit for yourself, so you can eat and take care of yourself while you're finding another job, or you're moving around, or whatever that it is that is going on in your life. But over here in Gemini, which is a good platform, use it if you guys want to. I don't really have a link below for you guys. Just go and sign up for the stock, for the trading app. Let's look at what I have, guys. Let's look at what I own. Let's look at my account. Let's look at the portfolio. And we're taking a little dive down. Crypto took a little bit of pain. Because remember, throughout this couple of days, it went a little bit higher than what it is now. Now it has come down a little bit. So, and right now, finally, I own 52 Polygon Matic tokens. Woohoo! And I own a full Solana token, 1.2.7 of a Solana token. So I'm pretty excited, guys. I'm growing my account slowly. And over here, you can stake your coins if you want to. That's up to you if you want to do that. But this is a long-term account. I'm looking at 15, 20 years. Not even, maybe 30, you know. Depends how well the market does. So when I retire, I could take some of this money out. You know, 30 years. It's a long time. I have my TD Trade account, guys. really trying to grow this account. I haven't deposited any money. I own 3 shares of the SPHD, Invesco High Dividend Low Volatility ETF, which means that pays good dividend, but the stock doesn't grow as much. Doesn't go 2-3x in 5 years, or 2x in 5 years. It's very slow. But this is, I'm trying this on TD Trade because I want to be able to invest in this account. Let's say a good $40,000, $50,000 of my own money. Then I just want that dividend to grow the account by itself, so I can focus on some other account. You know, even though this is long term, I'm not pulling this money out until, you know, in 30 years. I'm 62 or something like that, 63. You know, and maybe not even there, because I probably, all I'm gonna do is probably, instead of keep reinvesting all the dividends, I would just probably pay myself the dividend, and probably reinvest 10% of all the dividend money I'm getting, just so I could grow the account slowly, not as fast as I was growing when I was just reinvesting all the dividend, but it's still gonna grow slowly, and I can live off the dividends. When you retire, you can have your pension, you can have your Social Security, you can have all your dividend accounts that, you know, we're trying to reach. With all of our dividend accounts and all our dividend stacks that we have throughout all the different accounts, we do want to get paid, at least by the time we retire, $50,000 to $60,000. You know, through with all the dividend stacks and portfolios that we have combined, so we can live off of that. Even though, of course, in 30 years everything is gonna cost more, the cost of living, the rent, everything is gonna be higher. But probably, like we're talking in the channel, a lot of these companies are aristocrat dividend, meaning that they raise their dividend every year. So it's basically, you know, a little raise. If prices go up, the government raises prices, interest rates, anything like that, you stack. Also, like Coca-Cola, one of the best, raise dividends almost every year, so you get paid more dividend. You're gonna get paid more dividend, guys. So we're looking for. And we have over here, don't worry, I don't own or have $1,500 on Coinbase. This is just the Ethereum token. We're looking at Ethereum. My real assets are Alchemy and AMP. These are my real assets, you know. And if you want to know a little bit of Alchemy, this is not financial advice. These are my own personal journey in this channel, and this is some of the accounts, tokens that I own. I know a lot of people tell me not to use Coinbase, but I like Coinbase. It's nice and simple, everything to look at. It's self-explanatory, guys. And the Alchemy token, which, let's see, a year ago it was 12 cents. It is a token that comes from it's powered by Ethereum. Alchemy Pay platform enable payments using a wide variety of fiat and cryptocurrencies. Fees are paid using the ACH token, and users can earn ACH rewards for purchases. Pretty cool. Typical holder 37 days. Like I said, these are my own personal tokens, guys. And you see, I own $29 worth of it, which is 2,445 Alchemy tokens, guys. And I also own AMP. Year ago, let's look at a year ago. AMP a year ago was like 8 cents, 9 cents. It's at 49.50 right now. And let's see. I also own $26.51 worth of it, and that gives me a 5,404 AMP tokens, which I like it. It's one of my favorite tokens. And let's see, and it's also an Ethereum token. Aims to collateralize payments on the Flexa network, making them instant and secure. If a BTC or ETH payment fails to do on confirm or launch transaction time, the AMP collateral can instant be liquidated to cover losses while the vendor receives payment of the fee and potential. So it's pretty cool. It's basically another currency if you can use, or it's taking too long for you to get your deposit on Bitcoin or Ethereum, guys. But yeah, guys, the Big Daddy Bitcoin, woo! I can't wait, man, for the crypto to rally again. The crypto market is amazing, guys. Can't wait for the crypto market to rally. And this is my not so new but not so old account. This account is on public, guys. We're not depositing anything. We're just gonna I already did deposit, I think, like $20. And like I said, since I work a regular job like everybody else, you know, I don't earn that much, so I grow my accounts very slowly, guys. $5-10 or whatever you can, but invest. Every time you get paid, invest a little bit of money. Remember, you can say, okay, I have this amount of money left after I pay all my bills. I have $300, let's say, left for the 2 weeks. Or $400 for 2 weeks. You could take, and you have a side hustle, of course. Little side hustle, you go make $30-40, $50, couple of hours, come back home, you know. So remember, you have your daily job that you have to go work 8 hours and still get to work, and then come back home and do your job and relax, eat, rest, and then go to your secondary side hustle. You're basically gonna take some of that money that you have right now that you just got paid, and you know, you're like, okay, I do need the 400. Without the 400, I'm not going to be able to survive for the 2 weeks or whatever. What you do is you take at least $50-60, you invest, you go and put that money, go work on your side hustle, make a little bit of money, and put that money back. Go and do your side hustle at least 2 times a week. That's 8 times. Just 8 times a month, basically. Say $50, 8 times a month. That's $400. If you spend a little bit of money on your side hustle, that'll be still, let's say, $300 that you have. That'll be for you to keep or to invest. Imagine if you invest $300 every month. In 12 months, that's what? $3,600. It's a lot of money, guys. You know? But stay motivated, guys. And I own over on this trading app, I own the BTI and BOO, guys. Just see, let me see over here on Robinhood. What do I have on Robinhood? I have the BOO and a little bit of the BTI too, guys. See, even though I have it on this over here in this trading app, I also have a little bit on Robinhood. because they pay pretty good dividends. And this account over here, it was more like testing it. I might just give this account to, my kids when they grow up. Could grow this account. My daughter's only like 4 years old right now. I still have another 15, 16 years. At least 15 years until she goes to college. Could grow this account for 15 years. And right there, that's her down payment for college. So she could go to college for free. Like I always tell you guys, investing is not only always for you. You can also take some of this money and, once you have a big enough account, you can go buy yourself a house, rent the house, then put your equity back in your account. You can put your money back in your account. So all we want is passive income, guys. We're looking for passive income while we work, so we can make money. Oh, breaking news, guys. Fed seems aggressively hiking to 5%, triggering global recession. Twitter top boss is set to exit with 100 million as most takes over. Survey of economists sees 75 base point hike, then slowing 3/4 says the Fed will err by doing too much. So guys, get ready. The Fed, for what they're saying and for what it's sounding like with the PCE numbers, the PCE report, is that the Fed is definitely gonna raise rates again by 75 point base. It's not gonna be a 50% or a 50 point or a 25 point like some people were saying. It's gonna be more like 75. Let's see. Federal Reserve officially will maintain their resolutely hawkish stance next week, laying the groundwork for interest rate reaching 5% by March 2023. Moves that seems likely to lead to a U.S. and global recession. Economists surveyed by Bloomberg say the Federal Open Market Committee will raise rates by 75 base points for a fourth consecutive meeting when policymakers announcements their decisions at 2 p.m. in Washington Wednesday, the service say. Rates are projected in the survey to rise another 0.5 point in December. Then by quarter point, so in December, right now in November, they're going to raise 75 base points, and then in December they're going to raise 50 base points. So it's going to bring us at Fed fund rate estimated on October, September. So we're going to be at 5% by October. Then we have November and December, which is going to bring it to like a 6.25. The economists see that the Fed has determined not to pivot too soon as it fights against the inflation rate at a 40-year high. The shift to a higher peak rate will reflect consumer price growth, excluding food and energy, that came in hotter than expected for the past 2 months. Yeah, food is going bunkers, guys. I live in New York. Food, electricity, my electric bill. I live in an apartment, let me tell you guys. It's basically double. They just came out of nowhere with a surcharge. I'm paying double the money for electric that I was paying. Like if my electric bill used to be like $100, I'm paying now $200. So yeah, and food is the same thing. It's like you go spend $200 a week on food. so you could cook every day at home. So I'm Spanish, so I love cooking at home more than anything, more than buying fast food or going out to eat. But yeah, guys, the inflation pressure remains intense, and the Fed is set to hike by 75 base points in November. Jace Kingley, chief of international economists at the IMG group. And I guess on December we're gonna get a 50 base point hike, giving a weakening economy and market backdrop. But the risks are skewed towards the 75 points base hike. Means that the Fed is still being hawkish. Let's see. I just wanted to take a look again at the CPI reports. Yes, look, food and energy are the highest, guys. At least for September. We're waiting for October. October, it comes out next week, the 4th of November. So CPI for all items rises 0.4% in September as shelter and food increases. Gasoline falls. Gasoline is going back up, guys. At least on the pumps around here. And the consumer price index for all urban consumer increased to 8.2%. Last month it was, I think, at 8.3%. So it barely went down. That's why everything's the stocks took a dive, and they become hawkish, and they started going down. Because the CPI came, that was for last month. This is not what we reported today. We reported today was the PCE numbers, guys. And yes, let's look at some more news, guys. Barron. But this is gonna be all for now, guys. Like and subscribe, please, if you like my lives. Let me know if I can change anything or do anything different in the channel, so I can make it more comfortable and easier for us to understand and see everything and talk about everything that is talking about in the stock market, guys. We are here to trade and invest. And remember, you don't always have to be looking at a screen. You could just be listening to me or anything like that while you are work. And like I said, just shoot me a text on the live chat and let me know if you want me to break it down a little bit more clear, or if you want me to read a little bit more. And please like and subscribe, guys. Like and subscribe. You guys have a good day. Live, love, and laugh. Keep investing. I love you guys. Stay up. Peace.